gold. So last week, Clinton and I think when we were forecasting, we went to the 4 hour chart and we look at this deeper fair value gap where price came to respect. So these are institutional trading levels. They push price to this fair value gap and they executed it. And before that, we were talking about this demand zone that since we didn't have any wick here, there is a possibility that price can pull deeper. If this fair value gap fills, price will pull deeper and come back here and go. But then, before even the market close, price actually tap into the fair value gap and it closed here. So our prediction was that when the market comes down, since we are very bullish, we expect price to actually move like that. Okay, when the market open, we expect price to have some form of low here. Then we'll look for buys from the lower time frame. Then we'll execute our buys. And sorry about that. Price actually have done exactly what we were thinking that price will do. Okay, so we have what is this? Sorry for so we had this here. Okay, if you watch it very carefully, there was this structure here. Okay, so markets as we had predicted came down. Then we broke the structure. You can see how big this candle also actually went. And we had this fair value gap here, which it has not been mitigated. So remember that price will actually come back here to mitigate this. But then we had another break of structure from this side, and price actually pushed back. And as we predicted last week, that we were going to 494,500. So what's going to happen next week? I believe that gold has much more to go. We are going to breach the 5,000 mark, and probably price might push back sharply for some sellers to take their profit. Then we are going to continue on the market. So what I actually expect to see next week is if the market opens, I want to check on the daily chart frame and see where we closed. Okay, so this is one thing that normally we also do. Okay, so last week this is the low here. Okay, and this is the high of the day. That is last week. That is the Friday. Okay, so if we can even try to see, let me see if let me go to the weekly chart. Okay, so we can say, okay, this is our weekly low here, and this is our weekly high here. Okay, so what I want to see is that price takes out the weekly high, which is not 5,000. We haven't gotten to 5,000. 4,089, set up a new high, then comes down. Okay, so you can see let me bring this through. Okay, I have been testing some strategies and back testing on the weekly, and I see that once you have a weekly buy or weekly sell, price tends to run for 6 months to 1 year or above. So if we look at this gold case study, look at where we had the weekly buy from. Okay, we had a weekly buy from probably even down here. Okay, you can come down here, or even if you take your trade from this breakout, that is 2,046, and you can see you could have kept building your position. You have another buy here. 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 And do you see how you just stay in the market? But if you have that patience to ride the weekly trend, you are going to actually make a lot of money, and gold is showing no signs of coming down. So as I was saying, if we come back to this is the daily chart. So this is Friday's low and Friday's high. When I come to the 4-hour charts, okay, you can see we have a break of structure here, and this is the unmitigated fair value gap which I spoke about. Okay, so what I'm expecting price to do when the market open is that either the price will move sharply, breach 5,000 mark for the first time, and there's going to be a sharp pullback for profit taking, probably as gold is all normally crazy. We could come back even and retest this 4932, or probably even come down to 4914 before we start moving up. So the key area is this here. This is a structure that has formed. I'll wait for price to open, and I'll see if this liquidity gets taken. I'll move into a shorter time frame, either 15 minutes or 5 minutes, and I'll either wait for a continuation buy. As you can see here, a very nice market structure has formed here. Once price open, I want to see what price will do to these liquidity levels after it's been swept. Then I'll move my chart to either 5 minutes or 1 minute, and I'll wait for either buy confirmation or sell confirmation. So we could have I'm still bullish. Okay, as you can see, price is not showing any signs of coming down. So any pullback into an institutional buy zones was what you'll be looking for if you don't even take sales. Okay, because price is actually bullish. So any sales that comes is a short-term sell. Whether I deliver 300 or 500 pips, then I'll look for a new buy zone and I'll take it. And if price closes above 4992, I'm going to look for a short-term buy, and then I'll take my profit or lock in my profit, trail the trade, and wait to see if price will go higher, or if we have some sort of liquidity to generate. This is what most people don't realize. When asset price hit an all-time high, you don't just jump in. Okay, you have to wait for something like this to be generated, so that it will give you either a continuation buy by closing above the new high to indicate that price wants to go higher, or you wait for those liquidity to generate and you have a confirmation for a sell that the price is about to make a correction. Okay? So that you can wait for confirmation, take your trade, take your profits, and then go away. What you don't want to do is, as soon as maybe you see that price hit 5,000, or let's say 5,020 or 5,050, you don't have any confirmation and you assume that price is going to drop, so you enter sell thinking that price will drop sharply. Okay, it's not going to happen like this all the time. So you have to actually wait for when an all-time high hits for liquidity to be generated. After that, you wait for your confirmation, and then you enter the market. Okay, so this is pretty much our view on gold. We're still very, very super bullish on gold, and then any sales that comes into the market, we're going to trade it with caution. As you can see, these are very, very good patterns that has generated. When I show this to you, on the weekly chart, so maybe if you want to be a position trader and you want to trade gold or any other assets, you can start doing your own back testing and see how, if you have a patience to ride a trend on your weekly chart, how price is going to deliver and give you massive profit, because the losses were really, really tiny. But one win can give you 1 to 50, 60, even more than 100 R when you are using the weekly chart. Okay, so let's move on to the Nasdaq, our next asset, and we'll talk about it. remember we spoke about something. I said when we want this channel to be educative, so we will be talking about, I've been mentioning about market structure. We'll make a video on market structure and explain it briefly so that you understand, and liquidity, all the terminologies that we are using, okay? Fair value gaps and anything that we are talking about. But we want the channel to be very, very interactive. So if you go to the channel and you watch the video, like I said, if you want to trade, maybe you don't trade gold, you don't trade Nasdaq, you don't trade GU, maybe you are trading EuroCAD. So if you want us to bring you weekly analysis on the EuroCAD, just like the channel and comment. Can you please next time break down your view for us on EuroCAD? Then we are going to do for you without charging you in a dime, okay? So yeah. So this is the Nasdaq as well. So pretty much it is done what we were expecting to do last week, and now this is where we are. Okay, on the 4-hour chart, or if we come to the daily charts, as we want to look at things from the daily perspective and see, you can see the price is approaching a supply zone here. Okay, we have supply here, and we have another supply here. So as if you come to the 4-hour chart, you can see that price has started reacting there. Yes, so I expect the reactions to come down probably into these levels here before I'll be looking for another confirmation for a buy, or the maybe market can move sharply, touch this supply zone here, and if you want to trade, move your time frame to a lower time frame, whichever you use for your entry, whether 15 minutes, 5 minutes, and wait for a signal for a sell, and trade it all the way back here before you look for a buy. Another scenario is if we have a candle close above these levels, okay, and these levels, and the candle stays above these levels, then that's the only time I will be looking. And all this move started from here. Come back to retest this zone. It could even come as much as we have another liquidity point here. It's pretty much a very, very simple chart. And there isn't much to talk about it for a long time. It's really straightforward. Expect price to come down, take out liquidity, this one or this liquidity, which are also demand zones. So we have two, 1 and 2. Either the first one or the second one, I move my chart to my entry time frame, either 15 minutes, 5 minutes, 1 minute, 30 minutes, depending on what kind of trader are you. Then I take a buy from there, and I expect price to push back higher up for my trade. So you can get the sell, okay? If you have a sell confirmation, which you can take that sell, because what normally you do also is, okay, you look at the range. This is where price close. So risk management wise, it make more sense if I have a sell confirmation, I take that sell and ride it all the way back here. You can see the range is more than maybe 800 pips range, compared to this short-term range, which is maybe 100 or 150 pips range to this side. For price, and see if price can actually push back and retest this supply zone, okay? This supply zone again, because this reaction is due to this fair value gap here. You can see we have some sort of fair value gap here. Okay, so that has been mitigated already. Now this is it. This is this fair value gap here. It's already been mitigated. Okay, so but because it's a market open, sometimes what the market makers do is that they will come and retest it again and drop it down, okay, and drop the price down. So I'll wait and see the confirmation, and I'll prefer to have a sell confirmation and write the market down here and have a buy confirmation and ride it up, because if risk management wise, the profit from this range up here to down here is bigger, okay, than trying to chase this smaller range. So whatever market you want to trade, this is how sometimes you have to approach it, okay. You look at the resistance areas, okay. So we have that resistance area here, and we have support areas here, okay. So in between this range is not good to trade, okay, but outside this also range here and to this next supply zone here, it doesn't make sense for me to trade risk management wise. Unless you are a scalper, if you're a scalper, yes, 50 pips, 100 pips can make your day. But if you are a position trader or you are trying to hold the market for a couple of days based on your 4-hour entry, and that's what you use to make your entry, then it makes sense when you have your confirmation on a smaller time frame from this below this range here. You can see we are making a lot of sense that to trade below this range to this before you come back than to trade from this range to this. So this range, this small buy here, if we do have a confirmation, that's for scalpers, you can take and maybe you finish for the day or the week, okay. And those who want to hold their trade for a couple of time, either you trade the range to this area and wait for a buy and trade it back up. That makes more sense risk management wise. So we thank you very much for supporting our channel. We value all of you. We encourage you to like, share, and comment, and let's make it interactive. If you have any question that you want to ask us, put it in the comment section and we are going to address it. And very soon we will come back on Wednesday to do midweek analysis and see what our forecast has delivered between Mondays and Wednesday, then what we expect for the Thursday to Friday, okay. So we will be expecting you, and then let's hope that we're going to have a good week next week, and take care of yourself. Enjoy your weekends. We'll catch you next week.